Good morning, folks. My name is Brian Baker, Rail Logistics Specialist here at PFL. We hope that everyone had a great President's Day weekend. The Dow closed lower on Friday of last week, down 232.85 points and down 658.88 points week over week. The S&P 500 closed lower on Friday of last week, down 31.39 points and down 69.77 points week over week. The Nasdaq closed lower on Friday of last week, down 168.65 points and down 243.09 points week over week. In overnight trading, Dow futures traded lower and are expected to open down this morning 179 points. West Texas Intermediate crude closed down 69 cents on Friday of last week to settle at $91.70 a barrel, down $2.03 per barrel week over week, ending 8 weeks of gains. U.S. commercial crude oil inventories increased by 1.1 million barrels week over week. U.S. crude oil inventories are 10% below the 5-year average for this time of year. Total motor gasoline inventories decreased by 1.3 million barrels week over week and are 3% below the 5-year average for this time of year. Distillate fuel inventories decreased by 1.6 million barrels week over week and are 19% below the 5-year average for this time of year. Propylene inventories decreased by 5.9 million barrels week over week and are 17% below the 5-year average for this time of year. Propane prices saw some relief last week, closing down 8 cents per gallon week over week, but up 36 cents a gallon year over year. Oil is higher in overnight trading, and WTI is poised to open up $4.42 per barrel from Friday's close. Total North American rail volumes were up 4.3% year over year in week 6, resulting in quarter-to-date volumes that are down 7.8% year over year. 8 of the AAR's 11 major traffic categories posted year-over-year growth, with the largest increases coming from coal, up 26.9%, and non-metallic minerals, up 17%. North American rig count is up by 11 rigs week over week. U.S. rig count was up by 10 rigs week over week and up by 248 rigs year over year. The U.S. currently has 645 active rigs. Canada's rig count was up by 1 rig week over week and up 48 rigs year over year. And Canada's overall rig count is 220 active rigs. Overall, year over year, we are up 296 rigs collectively. We are watching a few things out there, folks. Trans Mountain Pipeline cost estimates doubled and project is delayed. Mechanical completion of the project is anticipated to occur in the third quarter of 2023 instead of the third quarter of 2022. The total project cost has increased from $12.6 billion Canadian to 21.4 billion Canadian. The impact to producers waiting for the project to be complete is unknown at this point. Maybe a short-term resurgence of crude by rail could pop its head given Trans Mountain delays. See PFL's rail report for further details. We have a lot to say on this one. In relation to Canadian pipeline news, Enbridge 3 million barrels per day mainline export system will accept all pipeline nominations for the month of March. This is the first time Enbridge has not rejected any nomination of its system coming out of Canada since June of 2020. See PFL's rail report for further details. Is Biden looking to increase oil and natural gas prices with his policies? Biden looks to pressure investors away from fossil fuels via climate disclosures. The Biden administration is prioritizing proposed rulemaking that would require companies to produce climate-related disclosures, most notably through the Securities and Exchange Commission, a form of indirect pressure on fossil fuel companies. The SEC is debating the extent to which it can compel companies to disclose details about how much energy they buy and how they handle climate risks. Also, the Federal Energy Regulatory Commission has made pipeline construction even more difficult. FERC issued historic overhaul of pipeline approvals on Friday of last week, a must-read in PFL's rail report. The reading of PFL's rail report today is an absolute must. Not only do we dive into more detail as discussed in today's podcast, we also summarize the latest petroleum by rail numbers, talk about refinery runs, overall petroleum import and export numbers, give you an update on the protests in Canada, and dive into the latest U.S. employment situation. Bottom line, a lot of great info. We hope that you enjoy reading PFL's rail report today. We do it all for you folks. PFL has been extremely active in railcar storage, return on lease strategies, subleasing, mobile repair, flaring, and cleaning. Make sure to check out our just posted reports at pflpetroleum.com or call PFL to troubleshoot any questions or concerns you may have at 239-390-2885.